Hi guys, Ben here and welcome to Motivation to Invest. Kevin O'Leary is one of the world's greatest business icons, worth an estimated $400 million. He's a regular on the popular investing TV show Shark Tank and loves investing into small businesses and startups. Kevin has a unique but simple and very practical investing style. So in this video, I'm going to reveal his top 10 investment tips for success. Let's dive in.
What areas of the world do you like right now where you're investing?
You know, I look at it very simplistically. I say, where's the GDP growth? Because that's the rising tide for any operation. A telco, a toll road, a consumer goods company. You'd rather own that in a country that has GDP growth north of 3%. So right now, you know, I used to be 70% invested in Canada. I'm down to less than 25% here because we're not growing. We're not growing in the US. I like Brazil, India, China, Asia, Cambodia, Thailand. They got it cooking over there. They're growing. So I'd rather own the Brazilian telco than any Canadian telco. I mean, you look at the worst returns in telco are in Canada. You can buy a Brazilian telco that's been a phenomenal investment for the last 5 years. And the great thing about these companies overseas is they're so big now, so huge, they're issuing the securities in US dollars, and I can hedge that back to the Canadian dollar for next to nothing. Diversification is the only free lunch in investing, and I see this happen so many times. Here's my basic lesson that I've learned that I never vary from, and this works. Trust me, it works. Never more than 5% of your portfolio in any one name, no matter how great the story is. If it's the next Nortel, if it's the next RIM, who cares? 5% max weighting. For me, usually it's 2.5 to 3%. I never let a stock get bigger than that in my portfolio. I sell into the strength all the time. Secondly, never, ever, ever more than 20% in any one sector. So if you love gold, you just can't get past 20% of your net worth in gold, or energy, or any other sector, or financial services. So good sectoral diversification is crucial. And finally, for me, I'm over 60% weighted in debt now versus equity. Not government debt, not treasury bonds, but corporate debt. Remember that a BB or BBB bond is serviced before they pay the dividend on a common stock. So I like to own right up the balance sheet. So I own a lot of prefs, converts, senior debt, floating rate notes. I love that stuff because when they get upgraded, I get capital appreciation. Meanwhile, I get a check. The key to life is the check coming in. It's the cash. If you always, always, always look at the free cash flow, this will keep you safe because the only friend you're going to have when you're old and crusty is not your dog, not your kids, it's the cash in the bank that's still going to love you.
In your book, you also say when you're investing, you should have an element of fear in there.
You should make the assumption when you make an investment, there's some probability you'll lose it. It'll go to zero. And that's why you need to have, you know, a reserve, like a backup plan, some cash set aside that if everything blows up, you're okay. I find it extraordinary when people make their first liquidity event and they have some capital, that they blow it all again. That is the biggest mistake. You've got to take a nut, even if it stays in cash or it's a very, very liquid, safe securities, and say, that I don't touch. It goes back to what my mother taught me. Spend the interest, never the principal. I mean, look, I make a lot of crazy investments. I don't touch the principal.
I'm guessing it came from your mother, but what would you say was the best piece of financial advice or business advice you ever got in your long, lengthy career?
When I was 7 and my brother was 5, she would take us to the bank with her, because that's where you would buy bonds back in those days. You could actually buy the certificate with the coupons every 6 months. You'd clip them off. She'd say to us, boys, never spend the principal, only the interest. I had no idea what she was talking about. That's all I do today. In my world, you never touch your principal. You adjust your spending habits, your gifts to charities, your use of capital based on how much you can generate from your portfolio. I view my portfolio and my trusts and my positions as a chicken on a spit dripping cash. Everything has to generate yield, whether it's a fixed income position or an equity. It has to. The only reason it can be in my world is it's generating capital back to me. I take that, I disperse it. The family lives off that, the charities I've committed to. So I'm always looking for a company that can help me with my problem of generating more yield. I can't even imagine buying a stock that doesn't pay a dividend. Why would you do that? What would be the reason you would do that? I don't get it. So to me, that means about 28% of the market to me, is just speculation. A stock that doesn't pay a dividend is a speculation. It's not an investment.
What investments are you liking today?
I'm liking very simple deals where I can understand the business model. I'll give you an example of how boring and simple and how successful it can be. This is from Shark Tank. You know, I look at a lot of deals on Shark Tank and on Dragon's Den because I invest 5% of my net worth every year in venture deals. So I used to have to go find them. Now they come to me. I've got 2 platforms to work on. This is a Shark Tank deal. So Oprah has a hairdresser. Interesting guy. His hobby was tea. This tea you drink. And he became what's called a nose. He had a certain skill to be able to smell Ceylon teas and blend them. One day he gives, a couple of years ago, a cup of tea to Oprah while he's doing her hair, and she sips it and says, "It's the best tea I've ever had." She goes on the show half an hour later and says, "This tea, called Talbot Teas, is the best tea I've ever had." He gets orders the next day for $500,000. You know the Oprah effect, you've heard of it, right? He can't finance that. So he comes on Shark Tank and he's looking for $250,000, and I agree to buy 35% of the company for that. I love tea, it's so simple. Gets on Oprah, 500,000 orders, Neiman Marcus, all kinds of individuals ordering on the internet. Simple. Tea, orders, cash flow, right? While we're in the middle of doing the deal, the show airs, and Jamba Juice, a public company, says, "We want to be in the tea business. We love this story. We love the brand. I want to buy the company." I haven't even written the check yet. And bang, the deal's done.
Wow.
Yes, wow.
Yeah.
That's the kind of deal I like because it was simple. It's not a complicated tech story. It's tea. Tea with a brand. Now you go into a Jamba Juice anywhere in North America, that's my Talbot Teas. That's right. Isn't that wonderful?
It is wonderful. That's why you are.
Well, that's why I am Mr. Wonderful. But you know, I look at it this way. The simple deals are the ones you make money on.
Okay.
So I take that cash back, I redeploy it. So I like simple stories with revenue attached to them. You know, the high-tech stuff, I came out of that market. It's so complicated, so much can go wrong. So I just love deals where they see an easy path to revenue.
Do you really literally mean that if you are in business, you have to be willing to fire your mom?
You know, it's true, you do. Because in the end, when you create a business and you start one, many entrepreneurs in this audience will understand this comment, your allegiance has to be to the business first. Because without that, all the good things that you want to do are going to fail. And so as your business grows and you make decisions about individual people, you can't let your emotion get in the way of what you really need to do, which is to drive success of the business. And so the minute you get your first customer, you now become number 2. The minute you get your first investor, now you're number 3. The minute you hire your second employer, you're number 4. It's still your business, but now you know who you have to serve. And I think a lot of entrepreneurs that fail don't understand that you're always serving someone. A shareholder, a customer, the business. And if you lose sight of that by letting your emotions get in the way, and this often happens, certainly happened to me in early days, many people hire their friends. They start a company with their friend or with their brother.
Good way to end a friendship.
Or it's a family business. And very often, nepotism is what kills the golden goose. Because very often the better manager is not your sister, brother, uncle, cousin, whatever. And I live through this all the time in the companies that I'm an investor in. I have 32 portfolio companies now. I watch this happen every day. And I don't let emotion get in the way of the true pursuit of what matters, the success of the business. I like gold because, in a way, it's a stabilizer. It's an insurance policy. You know, I listen to all the gold pundits, and they're always wrong as far as I'm concerned. It's impossible to time the moves. I've owned gold for decades, and I simply have a 5% weighting. I look at it quarterly. When it becomes more than 5%, I sell into the strength. And when it weakens, I buy into the weakness. It's just a stabilizer. You know, I'm not one of those guys that's going to go to 40% weighting in gold. Okay. I don't believe the hyperinflation story. It hasn't happened. Gold is popular for a whole host of reasons. Yes. And 5% seems to be enough. It's worked for me in portfolio management. It's the only security I own that doesn't pay a dividend.
So, Kevin, I guess, do you not care if gold goes to $2,000 or $5,000 an ounce? You're still going to buy gold?
Yeah, I don't care. Like, let it run. I'll be selling into that strength, keeping it at 5% weighting. You know, what I've learned, I'm an old crusty investor. When everybody's saying you gotta own it, you should be selling it, because when it corrects, it doesn't touch the sides on the way down. So I simply say 5% is good for me. Some people like a 10, 15% weighting. I'm a 5% guy, and I'm disciplined about it. I hope it runs to 5,000. I don't care. I'll be selling all the way up, keeping it at 5%. And when it corrects back down to 2,000, I'll be buying it in. It's fun. That's the way you should work with gold. Never get so caught up that you take all your dividend-yielding securities that are also a hedge against inflation and put it into a commodity like gold.
And to my exposure, most of the business people I've met, the successful ones, the CEOs or whatever, they are at their core optimistic. Can you be a pessimist and be a successful entrepreneur? You have to be optimistic.
I think you have to view the world in a way that assumes success. Otherwise, you'll never have the energy. Maybe not a pessimist, but a skeptic is a good thing to be. Because what I've learned about business over all these years and all these deals, it's never as good as it sounds, but it's never as bad as it looks either. You know, every day, I've got 32 portfolio companies now. Something wildly bad is happening to one of them, and the cell phone rings at 6 in the morning, and something fantastically great is happening to another one. And it seems to me the random serendipitous nature of it all is really intriguing to me, because if I could only show the pessimistic or very, depressed entrepreneur that is calling me saying, oh my goodness, we just lost Walmart or whatever it is, it's the nightmare of their day, versus we just got Walmart on the other business. I'm trying to get everybody in the same universe to realize it's never as bad as it sounds, but never as good either. You have to get up in the morning and go back to work.
How do you deal with your emotions? I'm curious to know.
Richard, what a fantastic question. You're absolutely right. Your emotions can be your best friend, but also your worst enemy, because when you make irrational decisions that are based on sheer emotion, you're often making the wrong decision. And yet emotions are part of your intuitive gut feel. You have to understand them. And I find the best way to do it is don't be impulsive. I get pissed off too. I get angry. I get elation. I get all of those things too. But what I've learned over time is not to make decisions under the influence of any of those emotions. Just delay the decision until you can be rational, maybe sleep on it, get up in the morning, have a coffee and think about it. And if you're not comfortable yet, don't make the decision. There's always the option to do nothing for a while. And the only way you're going to learn that is through experience. All the decisions I made under heavy duress or emotional stress have cost me a fortune. Big mistakes. And also, revenge is a stupid emotion. It makes you do stupid things. Be rational about it. Doesn't mean you can't, be pragmatic, but being motivated by hatred or fear or anything like that is never a good outcome. What's the value of a stock that never returns capital to its shareholders? I don't know, because the only way you can make money is if somebody else is willing to buy that position at a higher price for some emotional reason perhaps, or for some foresight that maybe the company will return capital one day. And I think of when you learn as an investor over multiple decades is the only thing that matters is free cash flow. That's it. There is no other reason to own a stock. And with that philosophy, it brings you into a place where you focus on a company's ability to generate incremental cash flow, because just owning a dividend-paying stock is not good enough, because let's say we find a stock today that's paying a 3% dividend yield, and tomorrow, because its forecast for sales get cut in half, the stock drops by 50%. Now it's yielding 6%. I don't want to own that stock either. So my tests in this index that I've created with FTSE Russell looks at the balance sheet. Every year we test to make sure that the company is viable in its ability to generate cash. This is extremely conservative investing. This is for the long haul. These tools are not for, as you're suggesting, for spicy, the hot stock du jour. I've done that. I've been there. Let the young legs do that. I have zero interest in that. I don't care what the hot new stock is. you know, when a company comes public, I won't own it either. It's got to prove to me over multiple years that it can continue to generate cash before it even fits into what I'm doing. So I'm really boring, and I like it that way.
So a great company doesn't necessarily have to equal a great stock. They can be two very different things from your perspective.
There's many companies where I buy their products and services, I would never touch their stock. So, you know, it's sort of, we're talking about real money here, the stuff that you need to preserve. You know, when I think about my family trust, I can't afford to mess around with that. I'll tell you something, nobody has a monopoly on great ideas, nobody. There's always somebody with a problem that needs to be solved, and that is the essence of a great business opportunity. Look around you in the world and see the problems people are having. Keep your eyes open, and when you discover one that you think you can fix, that is the beginning of a business, my friend. That's how it starts. So don't be down and don't say that all the great ideas are taken. That's never the case. There's always the next great idea, and that's what's wonderful about being an entrepreneur. You got to keep sort of your mind open and your eyes open and always be looking for opportunity. And don't be depressed. I don't like that tone. Let's get happy and let's get focused and let's get to work. And by the way, the greatest companies ever started were many that were started with no money. It's not about money, it's about solving somebody's problem. If you can solve a problem, you can start a business, even with no cash. You're going to provide as much as you can for the little as you can to start it and prove it out. You get a product or service that people are buying and they're saying, this works for me, you're solving a problem. That's the beginning of a great journey.
So which investing tip resonated the most with you? Comment your favorite below. If you enjoyed this video, go ahead, smash that like button and definitely subscribe. See you next time.
Coming in, flex, I just wanna win, LABB who we running with, coming in, flex, I just wanna win,